So what happens after 10 years of good trading? Well, you might become a master trader, and that's what we're going to talk about today. You ready? So let's go. Yes. What's going on, guys and girls? My name is Ben, aka Day Trading Addict. And what I do on my channel, I help struggling traders take day trading to the next level. And today we are going to talk about what master traders do throughout their journey, okay? If you didn't see the first video, I would suggest you check out that first video. We went over a lot of things that master traders do. And I also explained that I'm creating a trading mastery series. And this video is the continuation. So just check out that first video so you know what I'm talking about. Now, in that first video, I explained that it usually takes up to 5 to 10 years to actually become a master. It doesn't matter what field you are in, it usually takes around that time. And I also explained that you can still make money even if you are not a master. But if you really want to become a master, it's probably going to take 5 to 10 years. If you look at Michael Jordan, right, it took, I think, around 8 years for him to actually win his first championship. It took LeBron James, I believe, 7 years to win his first NBA championship. And it took Steph Curry, actually, I think 5 years to win his first NBA championship. So it usually takes around 5 to 10 years to actually master your craft. Again, you can still do good even though you're not a master. Before these guys won NBA championships, they were still putting up good numbers, right? But to actually get to a high level, it's definitely going to take a lot of years, like 5 to 10 years. Now, let's talk about what master traders do, what separates them from the average traders, right? And what they do throughout their journey. So, first thing we're going to talk about is master traders are very specific. They do not want to be vague at all. And it's for a good reason, because you are risking your hard-earned money. So why do you want to be vague when you are trading? I know for a fact there's a lot of traders out here that don't have a very specific strategy when they are trading, because you can tell by the questions they ask, right? So you need a very specific strategy, especially if you want to take your trading to the next level, because think about it, master traders, they really risk a lot of money per trade. So if you're risking a lot of money per trade, you definitely need to be very specific, because if you don't, you can actually lose a lot of money. I remember doing a live stream with a group, right? And I asked the group, listen, let's say the market is going down, right? And all of a sudden the market reverse. What are you looking for you to say, you know what? I'm not looking for no more shorts. I'm only looking for longs, meaning I'm only looking to buy the market. You know, one person said, you know, if the market breaks the previous high, that's why I only look for buys. And I said, you know, that's a good answer, but it's still not specific enough. And then one person said, you know what, break a structure. And I said, you know, that's a good answer, but that's not what I'm looking for. Another person said, well, if it breaks the trend line to the upside, then, you know, you can look for buys. I said, yeah, that's true, but it's still not specific enough. So what I said is, all right, listen, what I like to see is if the market's going down, right, and all of a sudden it reverses and it goes up, for me to only look for longs, I want it to break the previous high, but not only break the previous high, I want that market to break that previous high with a lot of volume. And you don't have to have a volume indicator to see if it breaks the previous high with a lot of volume. You can just look at the candlestick, right? And if it breaks it with a lot of volume, that tells me that there are a lot of buyers in the market, and most likely the sellers are gone. And right now is probably not a good time to look for shorts. Now, if the market gives me signs that it's weak and it's going to continue to go back down, then I'll say, you know what? I'm not looking for longs anymore. I'm going to look for shorts. But if I see a lot of volume come in, then I'm going to probably look for a pullback at a key level, and I'll look to buy the market. And to me, that's very specific, because the market could actually break the previous high and still go back down. And I see that a lot of times. So just to say the market breaks the previous high, to me, is not specific enough. So that's a good example of just being very specific when you trade, because that's going to allow you to trade with confidence and also be okay with risking money when you're trading. Now, the next thing master traders do is they do things that they don't want to do, right? And this is very, very important. Good example is back testing. You think I want to back test all day? I don't want to do that, right? But I know for a fact, if I want to take my trading to the next level, I'm going to have to back test. I remember taking my laptop to work, right? When I was taking the bus and the train, and if the bus wasn't packed, right, I would go to the back, open up my laptop and study the charts, right? And the same thing on the train. I will open my laptop if it wasn't packed on the train, and I will study the charts. You think I really wanted to bring my laptop to work? No. But in my head, I knew, okay, I have to do things that I don't want to do. You know, it's just what it is. It's how things work. If you have been following me, then you know that I lost over 70 pounds. And throughout my weight loss journey, there were days where I'm like, I don't feel like eating the right things, but I knew that if I want to continue to lose weight, I'm gonna have to continue to eat the right food, even if I don't want to. So master traders understand doing things that you don't want to do is part of the process, and you have to be okay with that. Now, the next thing master traders understand is master traders understand that all trades are not created equal. They know the difference between a low quality trade, a medium quality trade, and a high quality trade. When it comes to master traders, usually they understand that, all right, if my high quality setup shows up, I'm probably going to risk more money because I know for a fact if that shows up, I'm probably going to win 70% of the time or 80% of the time. And again, it goes back to being obsessed with the stats. We talked about that in the first video. Master traders are very obsessed with their stats, so they know, all right, this trade right here is a high quality trade. Now, usually high quality trades don't show up that often, so keep that in mind. But they know, all right, once this setup shows, I'm going to probably risk more money because that trade might win 7 out of 10 times or 8 out of 10 times. So it's best to risk more money on that trade. Now, the low quality trades, they might not risk that much money. So let's say that on average, you're risking $500 per trade, right? Now, on your low quality trades, you might risk maybe $100 here. Your medium quality trades, you might risk maybe $150. But when you see your high quality trade, boom, you're going to hit it with that $500 or more because you know that trade is most likely going to win. Most average traders think that every single trade is the same, right? And I want to challenge you. Just take notes and look and see to find out what trades are your high quality trades. Now, you are not going to find this right away. It's definitely going to probably take you some time to find this because you have to have stats to back it up. But once you find it, you're going to realize, wow, that trade right there, I probably need to risk a little bit more. Now, when you first start doing this, you probably don't want to risk too much. So let's say on average, you're risking, $100 per trade. Maybe you could bump it up to 110 or 120 just to get your feet wet, just to get used to it, because you don't want to risk a lot of money on that trade at first, okay? You just want to get used to the process. But understand that master traders, they usually risk more on certain trades. Now, the next thing master traders understand is they understand the compound law, right? Now, most people, when they hear the word compound, they automatically think about, financial market or something that has to do with money. But when you really study compounding, you realize that you can actually use this in any part of your life, right? If you really study compounding, you will understand that compounding is all about momentum, right? That snowball effect. In order to take that little snowball, right, and actually make it bigger, you have to make it roll down the hill. And when it's rolling down the hill, right, basically the reason why that snowball is getting bigger is because the momentum that's behind it. So the key to compounding is basically you do not want to stop. You want to keep going because once you stop, it's very hard to start back up. Let's say I've been going to the gym for 4 weeks straight. And then let's say I take a week off. Even though it's a week off, right, and I've been going for 4 weeks straight, me trying to go back to the gym, taking a week off, it's like, it's very hard to get back into that rhythm because you stop the momentum. And this is why you really have to understand this law, because momentum, it will help you build that necessary energy that you need to take your trading to the next level. So I actually did an experiment with 2 frozen chicken nuggets, right? So the first chicken nugget I put in the microwave and I wanted to heat it up for 30 seconds, right? But the first one, I decided to press 2 seconds for 15 times to heat the chicken nugget up. So 2 seconds times 15 equals 30 seconds. Now, the second one, I actually pressed 30 seconds and then I decided to heat up the chicken nugget, right? Now, which chicken nugget you think was hotter? The first one or the second one? Well, I'm gonna tell you, it was the second one. Why is that? Well, because of the compounding law, right? I didn't stop. I just did it for 30 seconds. And within that 30 seconds, it's building up momentum, right? It's building up momentum. So it's getting hotter and hotter and hotter. And boom, the chicken nugget was hot enough so you can eat it. Now, the first one, what I did was I pressed 2 seconds, I stopped. Another 2 seconds, stop. Another 2 seconds, stop. I did that for 15 times and that equals to 30 seconds. But the difference is I stopped the momentum. And this is why I'm telling you right now, once you have something good going, do not stop. Don't stop the momentum because it's going to be very hard for you to pick back up where you left off, right? Compounding makes you smarter. It makes you wiser. It makes you stronger. mentally and physically. So if you go to the gym and you compound your weights, right, you're gonna get stronger. And the same thing goes with your mind, right? The best way I can explain compounding is it's like building up pressure, right? So you build up pressure, and then when that pressure release, the more pressure you have, boom, it's gonna be very, very powerful. You can actually use this in any part of your life, right? Now, the next thing master traders do, they are very picky with their trades because they understand that taking trades that are not a part of their system is a waste of time, right? They might lose money. Think about it. The trades that you are taking right now and you're probably losing money from those trades, it's probably not part of the system. And if I'm a master trader and I'm risking a lot of money, okay, per trade, why do I want to take these low quality setups? I don't. This is why I don't like to trade the open, okay? Yes, there are good moves at the open. Sometimes I trade the open, but it's rare, okay? I like to look for high quality trades because I'm risking a little bit more than the average. And when you are picky, then you can do that. But if you just trade in every little thing, mentally, you're not there yet to actually become a master and risk more per trade because you're just trying to chase everything that moves. So it's very hard to actually size up when you're trading that way. Now, last thing we're gonna talk about is master traders don't care about win rate, right? I hear this all the time. What's your win rate? What's your win rate? Master traders, all they care about is taking the right trade. And remember, master traders are obsessed with their stats. So they know, all right, even if I have 2 losers in a row or 3 losers in a row, it doesn't matter to me because if I keep taking the right trade, I can make money. It's just what it is. I remember one week, my win rate was around 28%. Now, let me ask you a question. If my win rate is around 28%, do you think that was a profitable week or not? I'm quite sure most of you guys are gonna say, nah, you probably had a losing week. And if I was new, I would probably agree with you too. But it was a green week. I actually made money that week with a 28% win rate. Now, every week is not going to be, 28%. Some weeks might be that. Or some weeks I might have a 75% win rate, okay? But to me, I'm not looking at win rate. All I'm looking at is, am I taking the right trade or not? That's it. And once you can think that way, you can take your trading to the next level. So that's it. That's all I have for you guys today. Listen, in order to become a master trader, you can't be average, right? You have to go above average. You can't do what everyone else is doing. So it's time to take your trading to the next level. If you enjoyed this video, make sure you hit that like button. Make sure you hit that subscribe button. If you don't have my trading program by now, make sure you check that out. It's below in the description. If you have any questions, please comment below because I try to answer all your guys' questions. Thanks a lot for your time, and please have a great day.